Stop. Do not scroll past this, because what I'm about to show you in the next 13 minutes is the exact signal that the biggest players on Wall Street have been quietly watching for months. And today, it just fired. Most people woke up this morning, checked the price of Bitcoin, saw it shoot up 6%, and said, "Oh, nice little bounce, probably means nothing." They went back to their coffee, back to their morning routine, back to not paying attention. And that is exactly how it happens. That is exactly how the majority of retail investors always end up on the wrong side of the trade. Not because they're dumb, not because they don't care, but because they're looking at the price when they should be looking at the signal. Here's what actually happened today. For the past 40 consecutive days, 40 days, a very specific indicator that tracks whether US institutional money is flowing into Bitcoin or out of it had been flashing red every single day, like a flat line on a hospital monitor, dead, empty. And then this morning, it blinked. It came alive. For the first time in over 40 days, the indicator that serious institutional players use to gauge American demand for Bitcoin just flipped positive. And in those same 24 hours, $307 million worth of short positions, traders who were betting that Bitcoin was going to crash, got completely and violently wiped out. Think about that number, $300 million, gone in one day. On top of that, after 6 straight weeks of outflows, 6 weeks of institutions slowly, quietly selling their Bitcoin ETFs, the flows just reversed. $257 million flooded back into the Bitcoin ETFs in a single trading session. Largest single-day ETF inflow in over 3 weeks. Are you still convinced this is just a little bounce? Because I've been in this market for a long time. I've seen bounces. I've seen short squeezes. I've seen dead cat rallies that sucked people in before the real drop. I know what those look like. And I'm telling you right now, this feels different. The signal that just fired, it's not coming from the price. It's not coming from social media hype. It's coming from the exact same place that the smartest money in the game has been hiding for 40 days. And they just showed their hand. Stay right here. Because what I'm about to walk you through could be the most important thing you watch this month. Now, before we get into this, and trust me, this gets deep, I need to be straight with you for a second. I am not a financial advisor. I don't have a degree in economics hanging on my wall. What I have is years of living this market. Years of wins. Years of brutal, painful losses. Years of watching signals and learning the hard way what matters and what doesn't. Nothing I say in this video is financial advice. Everything you're about to hear is for education and entertainment only. Your money is your responsibility. Always do your own research. Always. No exceptions, no matter who's telling you what. We clear? Good. Because what's coming next, you need to hear this with clear eyes. Let me paint you a picture. Imagine it's October 2025. Bitcoin just hit an all-time high somewhere north of $126,000. The internet is going crazy. Everyone's talking about it at Thanksgiving dinner. Your cousin who's never owned a single Satoshi is asking you how to buy crypto. CNBC has Bitcoin on every segment. It feels like everything is perfect. And then slowly, quietly, the wheels start to come off. November, a little red. December, more red. January 2026, Bitcoin drops from $89,000 all the way down to $62,000. 25% gone. Just like that. February, even darker. Fear everywhere. The market gets so negative that the fear and greed index, the meter that measures whether the whole crypto world is feeling greedy and excited or terrified and selling, it doesn't just drop to fearful territory. It drops to 11. 11 out of 100. That is one of the most extreme fear readings this index has ever recorded. To put that in perspective, at the bottom of the COVID crash in March 2020, the index hit 8 at one of the darkest moments in crypto history. We just touched 11, and people wonder why retail investors are running for the exits. Here's the thing, though. Here's what I've learned after all these years in this game. The most dangerous thing you can do in any market is make decisions based on how you feel instead of what the data actually says, because I've seen this before. I've literally lived this exact moment before. Think back to late 2018. Bitcoin had crashed from $20,000 all the way down to $3,000. 85% of its value just wiped out. People were done. Subreddit posts declaring Bitcoin dead. News articles. My own buddy called me and said, "Dude, I'm selling everything. It's over." I tried to tell him to wait. He sold at the bottom. 12 months later, Bitcoin was at $13,000. 18 months later, it hit $60,000. Or think about March 2020, COVID. The whole world shuts down. Bitcoin drops 50% in 48 hours, literally 48 hours. Everyone is panicking. And you know what the smart money was doing during that panic? They were buying, quietly, steadily, without telling anyone. That is the pattern. That has always been the pattern. And before you say, but this time is different, I want you to hold that thought. Because I'm going to show you the data that suggests it might actually be different this time, but not in the way you think. Let me tell you what's actually been happening in the Bitcoin market over the past 6 weeks. Not the surface level price stuff that everybody can see. The stuff underneath. The stuff that most people never bother to look at because it takes a little more digging. In 2026 alone, US spot Bitcoin ETFs, the ones that regular Americans and institutions use to buy Bitcoin exposure without holding the actual coin, have been bleeding, week after week. 6 straight weeks of net outflows totaling $4.5 billion. BlackRock's fund, Fidelity's fund, ARK Invest, all of them watching money walk out the door. That's not normal. That's institutions reducing their exposure. That's hedge funds de-risking their portfolios. That's serious money saying, I'm not sure about this right now. And while that was happening, something else was going on with the average Bitcoin holder. Bloomberg ran a headline today that I actually had to read twice. They reported that approximately 45% of all Bitcoin currently in circulation is being held at a loss, meaning nearly half of everyone who owns Bitcoin bought it at a higher price than it's trading at right now. Half of all Bitcoin holders, underwater. Think about what that means emotionally. Think about the pressure you feel when something you bought is down 20, 30, 40%. The urge to just make the pain stop, to sell, to cut your losses. That pressure is real. It's human. And when 45% of holders are feeling that pressure simultaneously, the market gets very, very dangerous. But here's where it gets interesting. Because while all of that was happening on the surface, something completely different was happening in the shadows. Subsection 1. What most people are missing. Most people are watching the price. That's their mistake. Always has been. The price is the last thing to move. By the time you see a big green candle on the chart, the people who made the real money, they positioned weeks ago, sometimes months ago. They didn't wait for the confirmation. They looked at the signals. So let me show you the signals that I've been tracking. And specifically, let me show you the one that fired this morning that stopped me cold. It's called the Coinbase Premium Index. Now stay with me here because I'm going to explain this simply, and it's going to change how you see today's move. Coinbase is the largest crypto exchange in the United States. It's where American investors, including major institutions, hedge funds, and registered investment advisors, primarily buy and sell Bitcoin. When there's strong U.S. demand for Bitcoin, the price on Coinbase actually trades slightly higher than the global average price across all exchanges worldwide. That premium, that tiny price difference, is your window into what American buyers are doing right now. When the premium is positive, American buyers are paying a little extra to get their hands on Bitcoin. Demand is rising. Institutions are actively buying. U.S. capital is flowing in. When the premium is negative, Americans are selling or sitting on the sidelines. U.S. capital is flowing out. For 40 consecutive days, that premium was negative, 40 days. Every single day for 6 weeks, the signal that tells us what U.S. institutional buyers are doing was pointing at the exit door. And this morning, for the first time since the beginning of January, it flipped. Positive, green, alive. Now you might say, okay, one day doesn't prove anything. And you'd be right. One day is a data point, not a trend. But here's the thing. That one data point didn't arrive alone. Subsection 2, the fear and the flip. Let me tell you what's been building under the surface for weeks. Think of the Bitcoin futures market like a tug of war. On one side, you have the bulls, traders betting the price goes up. On the other side, you have the bears, traders betting the price goes down. In a healthy market, this rope stays roughly in the middle. But for the past several weeks, the bears had pulled so hard, so aggressively that the rope was almost entirely on their side. There was a massive crowded bet building that Bitcoin was going lower. Traders were paying extra fees just to maintain their short positions. Every single day, short sellers were paying a premium to keep betting against Bitcoin. That is an extremely dangerous setup. Because here's what every experienced trader knows. When a position gets too crowded, too one-sided, the market eventually punishes it. It doesn't warn you first. It doesn't send a memo. It just moves fast, violently, in the opposite direction of where everyone was leaning. And when it does, the people on the wrong side don't get to exit calmly. Their positions get liquidated, forced closed, at the worst possible price. That's exactly what happened today. $307 million in short positions, people betting Bitcoin was going down, were completely wiped out in a single 24-hour window, the biggest short liquidation event in weeks. Now here's what you need to understand about what that means for where the price goes from here. The open interest in Bitcoin futures, the total dollar value of all active bets in the market, dropped from $61 billion just 1 week ago down to $49 billion today. That's a 20% decline in total leverage. What that means is the market just went through a serious deleveraging event. The over-leveraged bets are being washed out. Think of it like a washing machine. When a market is full of too much leverage, too much borrowed money, too many risky bets, it has to spin that excess out before it can stabilize and move cleanly. That's what a deleveraging event is. It's the machine doing its job. The last time Bitcoin's futures market deleveraged this dramatically was right before a significant move higher. I'm not saying that's guaranteed to happen again. Markets don't work like clockwork. But I've seen this pattern enough times to know you don't sleep on a $49 billion deleveraging event. Real quick, and I'll keep this brief because there's more important stuff to cover. But if you're the kind of person who wants to see these signals before they make the news, if you want to be sitting there nodding when the headlines hit because you already knew it was coming, then you already know what to do. Just make sure you're here when the next one fires. Because what's coming in the next few weeks in Bitcoin? I'm already tracking it, and it's bigger than what we're talking about today. I'll have it ready for you. You just have to be here. All right, back to the signal, because we haven't gotten to the part that genuinely shocked me. Subsection 3. The whale move that changed everything. While most people were watching Bitcoin bleed through February, panicking, questioning their life choices, wondering if they made a terrible mistake, the biggest wallets in Bitcoin were doing the exact opposite. On-chain data, and this is public information, anyone can verify this on the blockchain, shows that wallets holding more than 1,000 Bitcoin, think about that, more than 1,000 coins. That's roughly $67 million at today's price. These wallets accumulated 53,000 Bitcoin just in the past 7 days alone. 53,000 Bitcoin. That is approximately $3.5 billion worth of Bitcoin that changed hands from weaker, scared, sell-at-a-loss retail investors directly into the cold wallets of the biggest players in the market. And not just any wallets. We tracked specific moves. 3,107 Bitcoin, that's over $200 million, moved directly to Coinbase Institutional. Not the regular Coinbase retail app you and I use, the institutional side. The dark behind-the-scenes custody service used by hedge funds and major investment firms. When $200 million worth of Bitcoin moves to institutional custody, those people aren't day trading. They're not flipping it in 48 hours. They're storing it, long-term, quietly, away from public view. That's what's happening while the retail crowd is panic selling. And then there's the ETF reversal. Subsection 4, the ETF reversal. This one is for every US investor. Okay, this is the part that is most directly relevant to you if you're in America, if you have a brokerage account, if you've ever thought about adding Bitcoin exposure to your portfolio. For 6 straight weeks, the Bitcoin ETFs, BlackRock's IBIT, Fidelity's FBTC, ARK Invest's ARKB, were seeing money walk out the door every single day. $4.5 billion in net outflows, hedge funds de-risking, institutions getting cautious. The smart money, supposedly, heading for the exits. 6 weeks of consistent outflows. That kind of persistent selling pressure has a weight to it. It pushes prices down. It creates the fear environment we've been living in. And then, February 24th, 2026, the data flips. $257.7 million flows back into the Bitcoin ETFs in a single trading session. BlackRock adds $79 million. Fidelity adds $82 million. ARK Invest adds $71 million, the largest combined daily inflow since February 6th. Now look, I'm not saying 6 weeks of outflows gets erased by one good day. It doesn't, and I want to be clear about that. One day of positive inflows after 6 weeks of bleeding is a signal, not a salvation. But signals matter. Because here's what I've learned about institutional behavior. These firms don't act on emotion. They don't panic buy because they saw a tweet. When a major fund manager at BlackRock signs off on $79 million flowing into Bitcoin on a single Tuesday in February, that's not impulsive. That's calculated. That's a decision made in a boardroom based on data, analysis, and conviction. The question is, conviction about what? And that's exactly where we're going next. Hey, quick pause right here. Because I care about this community genuinely, not just as an audience number on a screen. I'm not telling you to buy Bitcoin. I'm not telling you to sell it. I'm sharing observations, pattern recognition, data points. The same things I'd share with a close friend over a phone call if they asked me, hey, what do you see in the market right now? This is not a trade recommendation. This is not a financial plan. Your money is yours, your risk is yours, and your decisions are yours. I've seen people follow gurus blindly and lose everything. Don't be that person, please. This is education. Always, always think for yourself. Now, let me finish what I started. All right, we've covered the signal, we've covered the squeeze, we've covered the whale accumulation and the ETF reversal. Now let me tell you what I think happens next. And I want to be really clear. This isn't a crystal ball. Nobody knows the future. Not me, not the analysts on CNBC, not the guy on Twitter with 200,000 followers who says he called the last bottom. Nobody knows. But what we can do is look at the data, look at historical patterns, look at where we are in the cycle, and make an informed, rational assessment of what the most likely scenarios are. That's what a good trader does, not predict with certainty. Plan for probabilities. So here are the 3 scenarios I see playing out from this moment. Scenario 1, the slow grind recovery. This is the scenario where today's signal was real. The Coinbase Premium stays positive. ETF inflows continue in the $200 million plus range for at least 2 or 3 more days. The shorts that were just liquidated don't rebuild aggressively, and Bitcoin slowly, steadily grinds higher. There's a very specific price level I've been watching like a hawk. It's roughly $66,500. That's where Bitcoin's 200-day moving average sits right now. Think of the 200-day moving average like the long-term heartbeat of an asset. When price is above it, the market is healthy. When it's below, the market is struggling. Bitcoin has been below that line for several weeks now. If it can get back above 66,500 and hold there, that changes the technical picture significantly. It shifts the market from struggling back toward recovering. In this scenario, over the next 30 days, I could see Bitcoin working its way back toward $72,000 to $75,000, not a moonshot. Just a steady, believable, confirmation-backed recovery. Scenario 2, the rejection and retest. This is the scenario where today was a classic short squeeze, and nothing more. The squeeze cleared out the over-leveraged bears. The price popped, and then, quietly, slowly, the sellers come back. The people who bought Bitcoin at $80, $90, $100,000 look at this bounce as a gift, an opportunity to get out closer to even, and they sell into the strength. Bloomberg published something today that haunts me a little. They said 45% of all Bitcoin holders are currently sitting on losses. Those people have been waiting for exactly this kind of bounce. Some of them are going to take it. If selling pressure reasserts itself from those trapped holders and the ETF inflows don't sustain above 200 million, Bitcoin could get rejected at that 66,500 resistance level and slide back toward the $62,000 to $63,000 zone. Below that, there's a critical level at $62,961 where a cascade of long liquidations could trigger, meaning if Bitcoin falls through that floor, we could see a fast, sharp move downward as forced selling kicks in automatically across the derivatives markets. If that level breaks, the next major support sits around $58,000. That's where Bitcoin's long-term 200-week moving average lies, the historical floor that is never permanently broken in any Bitcoin cycle, ever. I don't think we get there, but I've been wrong before, and knowing that level exists means I'm not going to be surprised if we see it. You know what I think about when I script videos like this one? I think about the message I got last month, and I get these more than you'd think. From someone who said they'd been watching this channel for 6 months. They said they watched the video where I walked through the exact same kind of institutional signal we're talking about today. They said they weren't buying or selling based on it, just understanding the landscape, knowing what to watch. And when the move happened, they weren't panicking. They weren't frozen. They had the playbook in their head. That's the whole point of being here, not to chase pumps, not to predict the exact bottom to the dollar, but to never be caught off guard, to be prepared. If that's the kind of investor you're trying to become, then honestly, you're already in the right place. Let me tell you about the third scenario, because this one is the one almost nobody is talking about. Scenario 3, the halving cycle bottom setup. Here's where I want to zoom out for a minute, because everything I've talked about so far is the short-term picture. But there's a longer-term context that shapes everything, and it's the most important piece of this entire puzzle. In April 2024, Bitcoin went through its fourth halving, the event where the rate at which new Bitcoin is created gets cut in half. It's a scheduled programmatic supply shock, and it has happened 3 times before, and every single time it has been followed by a major bull market. Now, the 2024 halving cycle played out a little differently than the previous ones. The price hit its peak earlier, around 18 months after the halving instead of the historical average of about 24 months. Bitcoin peaked at approximately $126,000 in late 2025, and now 22 months after that halving, we're in correction territory, down roughly 46% from the all-time high. Here's what's interesting. In previous halving cycles, the deep correction phase, the part where fear was highest, where retail was most convinced the bull market was over, that phase typically bottomed somewhere between 18 and 24 months after the halving. Guess where we are right now? 22 months after the halving. Multiple respected analysts looking at on-chain cycle data are pointing to a potential cycle bottom window somewhere between May and October of 2026. That's the next 3 to 8 months. And what are the smart money players, the biggest wallets, the institutional buyers, the ETF managers, what are they all supposedly doing right now with the market in extreme fear, with the fear and greed index at 11, with retail panic selling into every bounce? They're accumulating. 53,000 Bitcoin in 1 week, 200 million flowing to institutional custody. ETF inflows reversing after 6 weeks of bleeding. They are positioning before the bottom is confirmed, because by the time the bottom is obvious, by the time the headlines say Bitcoin is recovering, by the time your feed is full of I told you so posts, the move has already happened. The window, if the cycle analysis holds, is the next few months. Not a few hours, not a few days, months. And right here, one more time, for the people who just found this video and need to hear it clearly, this is not financial advice, not even a little bit. I'm an observer, I'm an educator. I share pattern recognition and on-chain data analysis for people who want to understand this market deeper than the average headline allows. I don't know your financial situation. I don't know what you can afford to lose. I don't know your timeline or your goals or your risk tolerance. Only you know those things. Please, if you're making any significant financial decisions, talk to a licensed financial advisor, not a YouTuber, not a Twitter personality, an actual licensed professional who understands your full financial picture. I've seen people put their rent money into crypto, their kids' college funds, their entire savings. And I've seen what happens when the market turns on them. I'm not here to be a part of that story. I'm here to help you understand this space better, with your eyes wide open. That's it. All right, we're in the home stretch, and I saved the most important piece for last. Remember how I started this video? I told you that most people woke up today, saw Bitcoin shoot up 6% and said, "Nice bounce, probably means nothing." I want to come back to that because I want to be honest with you about something. They might be right. A single day, even a day with a $300 million short squeeze, even a day with ETF inflows reversing, even a day with the Coinbase Premium turning positive for the first time in 40 days, a single day does not a trend make. I've been in this market long enough to know that the market lies sometimes. It sends signals that look exactly right and then does the exact opposite anyway. That's the nature of this beast. That's what makes it simultaneously the most frustrating and the most fascinating market in the world. But here's what I also know. When three completely independent signals, the Coinbase Premium, the ETF inflow reversal, and the whale accumulation data, all align on the same day, the probability that its noise drops dramatically. These aren't correlated signals. They're measuring three completely different things. The Coinbase Premium measures U.S. exchange demand. The ETF flows measure institutional capital allocation. The whale data measures on-chain accumulation behavior of the largest holders. Three different lenses, three different data sources, all pointing in the same direction on the same day, after 40 days of pointing in the exact opposite direction. That's not nothing. Here's the other thing I want to leave you with, and this is something I genuinely believe from years of watching these markets. Bitcoin has a way of punishing the most people in the most painful way at the worst possible time. Think about it. When did Bitcoin dump the hardest in 2026? When fear was highest, when everyone was already scared and holding loosely. It went lower than most people thought it would, shaking out the weakest hands first. And when does Bitcoin tend to make its most violent moves to the upside? When everyone has given up. When the headlines are most negative, when the fear and greed index is sitting at 11, where it was just days ago, and people are wondering if this whole thing was a mistake. The market doesn't care about feelings. It doesn't care about your average purchase price. It doesn't care about the tweets, the news articles, or the Bitcoin is dead posts. It just moves, and it moves in the direction that inflicts maximum pain on the maximum number of people. Right now, with 45% of holders sitting at a loss, with 6 weeks of ETF outflows having beaten the sentiment into the ground, with short sellers so crowded that 307 million of them just got wiped out in a single day. Ask yourself, what would hurt the most people right now? A crash to $40,000 would hurt the bulls who just bought the dip. But a violent, unexpected run to $90,000 or $100,000, that would absolutely devastate the 45% of people who panic sold their losses. The people who said, "I've had enough," and tapped out at the bottom. The people who 6 months from now will watch Bitcoin climb higher and think about the exact moment they sold. I'm not telling you that's what happens. I genuinely don't know. Nobody does. But I am telling you to think about it. Really think about it. If this video did anything for you today, if it made you see even one thing you didn't see before, made you think about the market in a slightly different way, then do yourself one favor, not me, yourself. Hit that notification bell. Because the next time a signal like this fires, and in this market, it will happen again faster than you think, I want you to be the first person who sees it, the first person who understands what it means, the first person who has the playbook while everyone else is scrambling to catch up. This channel isn't about hype. It's not about Bitcoin to $1 million nonsense. It's about data, patterns, preparation, the stuff that actually matters when real money is on the line. If that's your frequency, then you already know the move. All right, let me ask you something directly. You've been sitting here with me for the past 13 minutes. You've seen the data. The Coinbase Premium firing positive for the first time in 40 days, the $300 million short squeeze, the ETF inflows reversing after 6 weeks of bleeding, the whales quietly stacking 53,000 Bitcoin while retail panics. You've heard the three scenarios: the slow grind recovery, the rejection and retest, the halving cycle bottom setup unfolding over the next few months. So here's what I actually want to know from you. Right now, in this exact moment, are you buying Bitcoin, holding what you have, or sitting completely on the sidelines? That's it. One answer. Drop it in the comments. Buy, hold, sidelines. And while you're down there, tell me your honest Bitcoin price prediction for the end of this month. I'm not looking for hopium. I'm not looking for $1 million by Friday. I want your real gut feeling number. Where does this thing end the month? I read every comment, every single one. And I'm going to pin the most thoughtful prediction I see and come back to it in my next video to see who called it closest. One more thing before you go. My next video is going to cover something that I genuinely haven't seen a single major Bitcoin channel touch yet. It's a regulatory development that's moving through Washington right now, quietly, without much fanfare, that could have enormous implications for every American who holds Bitcoin or Bitcoin ETFs. And when this hits mainstream media, trust me, you're going to remember that you heard about it here first. That video drops this week. You do not want to miss it. Stay sharp, stay informed, and I'll see you in the next one. Peace.